What is up, you guys? Crazy Monday. Hang tight 1 second, just turning off phones so we don't get slammed here. Good morning. Give everybody a couple minutes. Looks like, man, I wish I could see what was going on the Twitter stuff. Like, I know that there's some people showing up over there, but I don't believe I can see comments on this. So if you could hop over to YouTube. I'll see comments as they pop up. Morning, guys. Give everyone just a second. Retweet it, send it out to your friends. Make sure everybody gets in. Give it a like too. Maybe post some comments in YouTube. That helps a lot for sure. Let's see. Do we have anything? Yeah, got a couple more hopping in. Cool. So every week what we do here, just kind of go through getting what's up, Fraser. Howdy. Are you yeah, Nick, GFAI. I don't know. I can't really talk about that one. It's just too small. But yeah, that was a major AI play. By the way, if you don't know, the AI plays are very much going on still. Pretty crazy. I can't believe I was looking at it was AI. Wow, God, $30 this morning. $30 for C3 AI. God, I don't even know how far I have to go back for on that one. Oh, I guess it was higher. A lot higher. Jeez. This company, I remember, I don't remember who it was, but there was some old like short seller report on this one long time ago. But yeah, I think it's more like a technology reseller. It's not necessarily what they think it is, but dude, it is flying. Cannot deny that. That's for sure. C3. Oh, SOU, and yeah, that was another one. Crazy runs for sure. All the AI sympathy plays. It was like GFAI was one. What was it? Big Bear AI, something like that. That thing just keeps going. Man. And SI. I don't know who else is watching SI. SI was crazy too. SI, Silvergate Capital, massive short squeeze. Speaking of short squeezes, we can get through a couple. Massive short squeeze on SI. I haven't looked today. Let's take a look. SI. I got another screen. Ooh, reclaimed. $17. I actually grabbed some comments on this, sold them at $21.75. But that thing is up and down 30%, like in a blink of an eye. It's so crazy. So insane. Yeah, SOU and BB. Oh, BBAI. I think that is the Big Bear. BBAI. Yep, Big Bear AI. That thing is up. God, I don't even know how many percent that is. That's insane. Just in the last 2 days, it's like double. That's wild. So short squeezes are still out. That's for sure. All right, well, let's hop into this. We got a couple people out here. And just again, every Monday, what we do is just kind of go through this. Last week, see what are the major headlines, what's still hitting the markets, what's moving markets. Is that Michael? What is up, man? Michael, you're in the analyst community. You can always like click that link. Should be able to see it. If not, I'll shoot you. Let me see if I can grab this. Michael Saul, huge fan, dude. I'll DM you on Twitter. You want to hop in? I don't know. No pressure though, man. Cool. All right. So anyways, as we get through this, every Monday we go through, just going to see what are the major headlines that hit. Nothing crazy. We're going to talk about the FOMC minutes or meeting last week. That was clearly the biggest one. And before we get into it, just got to run through the basic disclaimer. Please, we're an option trading group. If you decide you want to trade options, call 188 options and get a copy of characteristics and risks of standardized options before you start trading. Carefully consider whether trading is suitable for you, considering your circumstances, knowledge, and financial resources, as you may lose all or more of your initial investment. Cool. That's out of the way. So what happened last week, man? What happened? It was so crazy. It was like bearish, and then boom. Where'd the bears go? It was just like out of control. And I think like for me, one of the best analogies I caught was Leisman on like CNBC, and he was like, Powell was basically like, I think it's going to rain outside, but if you kids want to go play in the rain, have at it. Right. And I think that sums it up pretty perfectly. Coming into the FOMC meeting, everybody was thinking 25 basis points, right? But we're getting so many. Michael, just wave to me if you want to hop in. I see you down there. So many different bearish, the news was really bullish. Michael, I just brought you up. What's up, man? And I was not expecting, I was thinking this whole, as we were running into FOMC, and if you have any different thoughts, Michael, let me know. I was just thinking, oh, this is going to give him so much more room to have a hawkish tone. And I mean, I think that the rest of the market was thinking something similar, but that is not what we got. And when we go into the charts, you can see here's what was going on. And the second he had some of those comments, it was just like, we're off to the races, and it was a wrap. So for now, I mean, it looks bullish, I think, but now we got this NFP right behind it, which was pretty much the big, here's the real thinking point, right? And we'll digest that. But I guess a couple of the other headlines, I thought some really funny one was like Rivian decides that they're going to make an electric bike. Apparently, they're not making enough on their cars or trucks, so they need a new source of revenue. Elon Musk not guilty on his funding secured tweet for the trial. That's official. Stock actually moved a little bit up off of that. And there was the whole shenanigans about the Chinese spy balloon, which, by the way, apparently, so I don't know World War III, right? So that's off the table. But apparently that's not the first time that there was a crazy, I guess this spy balloon has happened many, many times before, and we just let it go. Other than that, short squeezes on watch. I guess Nordstrom, JWM, it got a huge pop. Looks like it's fading today, so it might be a good short. Keep it on watch, though, if it decides to move. That could be one that could get a little interesting if it decides to wake up. Right now it's bleeding out, so it's a good short at the moment. But all right, so hopping into the rest. Let's see. Here's the real data. And Michael, again, feel free to hop in anytime. So I think a couple different things. As we were coming into the FOMC meeting last week, we were getting a lot of information that was like, oh, and inflation slowing, economy is getting better, and there's different schools of thoughts. So to me, I've been all over this gold trade for so long, and it's mostly been like a stagflation kind of what's the word hedge, right? So if you believe that there was stagflation in the future, essentially gold and precious metals, that's going to be your best play by far. I don't know that it's necessarily over, but what we're seeing right now is that what is stagflation? I guess I'll back up a little bit. That is where inflation's growing, or I guess static. Let me see. I don't want to misspeak here. I had a slide. Let me see if I can find it. Yeah, it's going to take me too long to find it. Anyway, stagflation, basically we have no growth and slow to little growth, and inflation's, slowly climbing. And I think we're not having that situation. That's the biggest one.
Yeah, and it's a lot with the workforce, right? Like the workforce, the unemployment's rising, and growth is, like you said, either stagnant or falling, and inflation is either rising or staying. One of the more important parts that a lot of people think they think that inflation, like a lot of things, is binary, right? It's either going up or it's going down. What happens if it's staying the same? And that's a problem, right? Because right now we have higher inflation than what we've seen on average over the last few years. So even if we don't necessarily keep rising inflation, we don't want to be pinned here either. That is the Fed's biggest concern, as you know, is that inflation is ingrained in the economy. Why? Because if you're sitting here saying, oh, you know what? Well, I might as well just go buy this now because next year it's going to be 5% higher or 6% higher or whatever percent higher, right? Then what does that do? That doesn't solve the Fed's edict, which is to throw cold water on demand inflation, right? It's going to demand will increase if inflation is ingrained and people think we're just going to stay this way, they're going to go buy stuff now so they don't have to pay more for it next year. And
Yeah.
that doesn't help the Fed quell demand. Anyway.
Yeah, no, right on, man. Thanks for saving me on that one too. By the way, while I was looking it up, I couldn't find the image. I used to have one, but it's very much to do with the growth rate, right? So, we're decreasing it. Well, we're increasing interest rates, but the question is whether or not the economy is going to be able to grow, right? And at the moment, it's crazy. Is that the data is saying that we will grow. So that kind of takes away that whole stagflation argument or thesis, which also crushes a lot of the precious metals trades. So I'm mostly flat there. I got a little NEM today. By the way, NEM had a headline. They made some crazy offer to buy Australia's largest gold miner, $17 billion or something like that. So they're down. Typically when that happens, it's like, does the market think that was a good decision? Are they going to give them credit for that being a good decision or not? Right now, clearly not so much. But that said, I mean, so home prices, we had Tuesday came in, home price index year over year actually came down slightly at consensus. Oh, this mouse kills me. Manufacturing, I'm going to skip down to Friday. So ISM non-manufacturing PMI, this was probably the biggest one for me. So the market was so anything under 50 is not growth, right? And so over 50 is growing. And ISM non-manufacturing PMI came in at 55.2. So that is all of a sudden growing. Now the question is, are we going to have this negative GDP 2 more quarters? Like that's what the market's going to be up in, basically deciding right now. We're trying to decipher, right? Is it going to go up? Is it going to go down? You guys are so funny. Yeah, Nick says, "What's up, man? We love Tiny, dude." Oh, there you go. What's this say? Carlos, stagflation condition, which, yeah, there you go. Slowing economy growth, right? And rising prices, right? So I think so. Thanks, Carlos. That's perfect. Carlos, by the way, you rock, dude. I never noticed you there. But so are we growing? Yes or no? And is inflation going up or going down? That's the question. And right now, I think inflation is kind of stabilizing. And so that's where we are. Like that now the market's deciding, well, is it going to drop off a cliff? And if it does come down, what's the speed of that inflation decrease going to look like? That's what nobody really knows. I think the market is definitely pricing another 50 basis point hikes, like 2 more 25% or 25 basis point hikes over the next 2 FOMC meetings. But here's the other thing. So labor costs, I put in a couple things on labor costs. So unit labor costs, quarter over quarter, this is preliminary numbers. This is coming down, right? So 1.5 was the consensus. Last one was 2%. This is part of that, are the costs going up for those large tech companies? We already know they're laying off a ton of people. By the way, though, like the jobless claims number, I mean, consensus was at 200,000 new claims, and it came in at 183, which is right around that 180, 190 that we've been sitting at for forever. And then Friday we get this non-farm payrolls number that just was like nobody saw coming. I don't even know how much I believe this, but this one. So here's the thing on non-farm payrolls. This is like how many jobs are being taken. If we want inflation to come down, that means that the velocity of money spending has to come down as well. And so what that means is that if we have more jobs being taken, there's more money coming into the system, then spending is not really going to taper as much, and therefore inflation could come back on the rise. And this is where the crux of the situation happens, right? I mean, the government numbers, I'll just say, like, they've been kind of funky lately. So a ton of revisions have been going on out there. And NFP, like, different things on how they calculate certain stuff, like all of this stuff going on right now. It's a little funky, but for sure, this should have been, and I think we did see it a little bit on Friday. Good news is bad news, right? To me, that's what I was expecting to see. I think coming into Friday, we just shot up right off of all this other stuff that was going on, and the Fed rate decision Wednesday, just kind of like a little bit of follow through. But after that number came out and there was a couple minutes of digestion, it was like, okay, everything started coming back down, and it started coming back down pretty quickly. And I think, for me, this first half of this week is really going to determine the course of February, at least February, if not further, right? So February, by the way, historically not the greenest, not the greenest month. It's not as bad as September, but it's typically slightly red when you look at the averages. So I'm not expecting any major things going on, but this one is just, it's going to be a little bit different because we have all these other things going on. So we got to pay attention to some of this data comes out this week coming ahead. Tomorrow, not today. Today we get nothing. 3 and 6 month bill auctions, which happen every Monday. Tomorrow we have a speech. We have Powell's speech. So this is where he's either going to he's going to have an opportunity to potentially backpedal. Michael's like shaking. Nobody knows what's going to happen, but I was hoping that we would be at peak Powell pretty soon, or that we had been. I just, like this kind of shenanigans, it's just not happening, right? We have a ton of Fed speakers throughout the week, by the way. So just keep that calendar on watch. Like these guys can come on and they say whatever, and they move markets intraday throughout the week. So keep that out on watch at least. And I think that's most of it this week is just going to be, Fed talk really beginning tomorrow with Powell. So whatever he says yesterday or last week, he was basically like, hey, look, I think we're not over, right? He basically said, I think it's going to rain out, but if you want to play, go ahead. And, he's going to have an opportunity to backtrack that and backpedal that. And so will all his colleagues. So we'll see what goes on. And again, not really expecting a whole lot. We do have some earnings data though. So the other bear case, so there are two bear cases out there, right? Just in general. So one is if you believe that earnings are going to come down, and we're at peak earnings, then you probably want to be pretty short on the market. And what I can say is I track the earnings for the Dow 30 pretty regularly. We run an earnings course. We used to run a lot of earnings courses, not so much anymore. But here's where we are, right? So Q1 last year, 24 beats, 5 misses, one meet, right? 24, Q2, 28, Q3, it goes 6 misses, 2 misses. This was last quarter. I'm thinking, okay, last quarter, there were still a lot of beats out there. But this quarter, so far of the 30 Dow Jones components that we have to go, we have 23 of them. I can't remember seeing this many misses across the table. I've never had an 11 here. So this week we get Disney. What I'm looking for really is I'm looking for the miss guide down and to hold higher, pricing hold higher, right? I think Pfizer was a good one to keep an eye on, right? Like pricing holds, right? When we were looking at GE, it was a big miss guide down, but price immediately bought up and goes higher. The couple that are just making me scratch my head right now are all the big tech, right? And I think we're going to find out this week, right? So all the big tech, just guide down, decreasing across the board on every unit that you can look at. Microsoft was probably one of the worst. Apple, I don't know if people actually saw this or if they're even talking about it, but that was a 30% year-over-year decline on Mac and iPad sales. And I know it's not a device company per se. Services were up, I think 6%. I don't know, Michael, if you remember any of that stuff, but it was a huge miss. It was a huge miss for sure. It was a big miss on Amazon and Google. We saw those both kind of trading lower now. And so that's really what I'm looking at. But I'm going to go ahead and hop into the indices really quick and just take a look. Oh, it looks like we're getting some of that today. By the way, if you're trading live, I had two, in the group. You can find it in the links. It's papergains.com/links. I put this chart up this morning. This was session gap, clean session gap on SPY right here. And we basically got right up to it, 411 and change, coming back down to the downside. And I'll just pull this back slightly. We have this level right here, which would be essentially a fair value gap. And it really starts to come in below 40. So if I can't hold 409, then we should come in and fill this what I call fair value gap. It's like this volume shelf that was created last week, right? And so where do we go from here? What does this mean to us? So here's the day. So this is Friday, Thursday. This is Powell's Wednesday speech. So I'm just going to mark this really quick. And you can clearly see, hey, what happened, right? What was going on? So typically what you'll see happen, and I'm just going to change this to a 5 minutes so you can see it maybe just a little bit better. I'll make this bigger. So we got a pretty crazy double bottom right here, 402.39. But this is a volume profile. So this is very clean fair value gap, almost no sellers right in here, 406.13. So to me, this 406 level between 406 and really, I'm just going to call it this 404 right here. Like I'm going to be looking for a bounce at some point in this little box this week. And if the markets can hold these levels, and ideally, I mean, if I get a shot at this 402, I mean, I'm not going to be going long right away here because it could reject. But this is kind of like, anything below these guys right in here this week, that's when it can get a little shaky, right? So if we can't hold, what is that, 402.38, it should go lower, right? The markets, this would look definitely lower. We have a fair value gap all the way down to 397.78, which is this guy right here, 398. On a 30-minute chart, by the way. So what we do typically to measure these kind of moves, this orange box right here, and I know there's a lot of lines, so apologies for that. Let me get some of this stuff out of here. So this box right here is going to be our big one right here. But this orange box, this is an average week's range. So I'm going to take from the open today, if I can get there, from the highs, basically. An average week's range to the downside would take us to that 398, which is that second level support right in here. Kind of like right in the middle of this prior chop zone, which would be honestly a typical pullback. And I'd most likely be looking for that like potential bounce. So for now, let's see. For now, below this 407, we should see short down below 405. And then I'll take a pause, maybe keep a runner or something. But if we get down in this lower section, sub 400, just barely sub 400 or around 400, this is going to be like your value area for a potential bounce. At least be watching for it right in here. Does that make sense? So short below 408, down to, could be down to 398, and then reverse course, right? Back to where we came from. If we continue and let's say we hold this 408 level, upside trajectory could bring us to that 420, which we had this fair value gap here earlier, 417. 420 has been a massive level. For as long as I can remember, or like for a very, very long time. Let me just move this. Let's call this 420. Let me make this a different kind of line.
You can see it's just a lot of complex stuff going on in here.
Yeah, a lot of lines right now. So 420 here. Here's this 420 level. So on the way up, this was massive overhead resistance. One to all of this kind of chop right here. And this was the major point that we actually broke down, 420, all of this got slightly above it. And this was the whoosh down over here. So, I mean, 420 is going to be the level that we fight. If we do get to the upside, we got to 417 at this point. I'm really just kind of like expecting somewhat of your basic pullback. And yeah, you're right, Michael. There's a little lines. Let me get some of this stuff off. But to give you a basic idea, usually we're not that zoomed out, so you can't see all of that. But this is what you want to do, right? Like fundamental events create technical levels. And this, if there was to ever be a fundamental event, it's right here. This is the one, right? If we can't hold 405, it's gonna be tough. We should hold it. And in this little zone, right? That's where I'd be looking for a bounce if you want to stay a bull. And I think, I think it's pretty possible, right? So just basic pullbacks. Where's the dip going to happen? Wow, this is the 2 year. So remember, I'd taken the VIX more or less off of my radar from a major watch perspective, just because of how it's calculated. It's only looking at 30-day options. I think 30-day SPX options. I don't know really many people at all that buy those anymore, so the volume's pretty low. But the 2 year, on the other hand, this thing is cranking right now. Like I can't remember like at this moment the 2 year is cranking. So the 2 year basically signifies what does the market think that the rate's going to be over the next call it 2 years for the next 2 years, right? So 4.6, pretty high. We topped out on this guy right around 4.8, something like that. Right here, 4.9, which was essentially the Fed's ultimate target. And that's really what's in question. So do we get to neutral? What is neutral? Neutral is where interest rates equal the bond rate, bond yield. And I think, honestly, I think we're pretty close to there. So at this point, when the 2 year reverses and starts going back down, that's to me going to be the mostly all clear signal. But for now, I think we still have this chop to deal with. Everything's coming up. Q is not as strong as diamond still, but I think we've just had such a big move that we go into a holding pattern, and that's pretty normal, right? Big moves create big bases, and it's not until the big base or the consolidation level actually breaks that we get those major moves, right? So like I was looking even at a Boeing, right? Boeing's had a huge move off the lows. I know a lot of people took some really short, some shorts last week. I don't know that something like Boeing, it would go into a consolidation. I don't know that it's going to get, pull all the way back. I don't expect that kind of stuff, right? So I expect more consolidation. And so this is a perfect example. So here's a daily chart. This Boeing, honestly, I think this chops in this range all month, right? If you get a chance to snag it at 198, I'd probably buy it. But I think it continues to chop in this basic range, right? And I think it could be like the entire month. So a move like this, right? This is, 60% in 2 or 3 months, 1 month of consolidation, definitely not unheard of. Same goes for GE, right? So I think GE is a bit extended. It's hitting a major level of, and if you're in the server, GE has been a huge win for the group for sure, but it's right back to a very, very difficult level. So take some trims, right? Like take some profit, and potentially, remember, if you're investing, the goal here of investing is to accumulate more shares. So can you accumulate more shares? I think so, right? What level is that going to be? Probably somewhere around 72, something like that. If we get a shot, take a look, see how it acts when we get there. But I think, collar your stock positions, specifically NEM. I sent last Friday or something on the server to collar, meaning like sell upside calls and buy downside protection with the proceeds. That was a beautiful trade. Right here, we're coming in back to that breakout level. So I think you take that collar off today quickly, and see how this reacts, right? So I think it'll give it a couple of days, to base out. But this is that exact breakout level. So if you were to see a picture perfect, support become, or resistance become support, it would be something like NEM right here at this 45 level that it broke out from prior. So that's that. This was an amazing trade also. I think most of this clearly come to an end. So we start looking for some new stuff. So let's, if you guys have any charts that you want to take a look at, shoot them into the chat, but I'll just go through a couple. So PayPal to me is one that I'm actually finally looking at. I've been building a little bit of position on this guy. I don't know if you're in the server, you saw me throw a risk reversal out not too long ago. That one expired, worthless. So just collected the premium, but below 80, just around $80 is where I've been trying to accumulate shares. This guy is not going to be an options trade right now. They report this week. Let's see. When does PayPal report? Believe on the 9th. So that's going to be Thursday, most likely after market close. So PayPal, though, by the way, historically, that one is one that you can buy options on for earnings, because it does have a massive a massive move historically. I'm just going to this is marketchameleon.com, and I go to earnings, and you can see, look, so last quarter not so much, but 9%, 11%, 25%, 10%. This guy on average is going to be 12, 13% mover. And this setup, I like this setup. There's been some accumulations. I like it here, actually, from an equity perspective, just coming back down to that prior breakout level and testing it one more time. So if PayPal can hold over this 82, technically, I think I start to, continue to accumulate shares here. Downside, it's a bit of a risk, but it's not a massive risk, right? Like downside 15%, but upside really, you could see, we'll see, right? This guy's one that I don't know what the street is expecting at the moment. I'd have to look at that, but it's been beat up pretty bad. I don't think it's going out of business. We'll just see. We'll have to see. I think this could be one where, this is going to be a stock picker's market where you have to pick your spots, take profits when you get them, but you have to find those kind of undervalued stocks and pick them up when you have the opportunity. And I think this one could be, it has the potential to be another Facebook. It really does. So I've been building a little bit of an equity position on this guy. Let's see who else we have. So Disney too. So last week we had a couple people ask about Disney. I think it's very similar. It's way further off the lows than PayPal. PayPal is very close. This guy though, so historically Disney does not move a ton on earnings, just as an FYI. But we'll take a look at it today. So there was one. So 13% last quarter, 5%, 9%. And before this one last quarter, this outlier, Disney did not typically move a whole lot. I think this one, though, if I take a look at Disney, Ivy is not bad. And so this is a situation where it could also end up being a straddle candidate, meaning you buy the call and the put. If the implied straddle, what is it right now? So that means how much the market expects it to move. Market is expecting a $6 move between now and Friday. Disney reports on the 8th. Wednesday. So I'm going to guess aftermarket again. But $6 could be undervalued. So what I'd say is take a look at this kind of data, add it up, find the average move, and then compare that to what the implied move is. My guess is here that this one could be a little bit underpriced, as well as PayPal. So if you're looking for option plays, these are the two that I would actually pick on the long side. Let's see. Earnings calendars. So this week, look at this. So we have 54 companies reporting earnings today after hours, 115 tomorrow, 132, and we're in the heat of earnings season. So 137, I think, is going to clock our high most likely. This is actually more than last week, but there's going to be a ton. Activision is after the bell today, by the way. Activision already down a ton on some ATVI. Already down a ton on some kind of whispers that the Microsoft deal is not going to go through. So it looks like most of the move has been done. That could be, EA was overpriced but had a huge move. This guy's moved, and I'm just going to look comparatively. Man, just this earnings drop, almost 13%. We could take a look. Activision. Yeah, Ivy's still super high on this guy. And then average move, 1%, 1%. Ooh, these guys barely ever move. This could be another interesting one for sure. Shoot, I thought I'd have it. I thought I'd have a layup for a sec. Guess not. Let's see. You guys have any that you want to take a look at? Have at it real quick. Just shoot them in the chat, and I'm going to try and pull up this calendar. Here we go. So here's the calendar. So PayPal after the close Thursday. Ooh, today Pinterest. That's going to be super interesting. Pinterest had last quarter they actually announced that they were going to open up a new revenue stream, and that kind of changed a little bit of the fundamental thesis. Pinterest, this is another one. It's huge base. And I mean, this is many, many weeks of basing. So this is what I like to see. We're going to find out today. This could very well be another straddle candidate. So earlier in the week or last week was a lot of short stuff, short time spreads, things like that. I'm feeling this week that we got some big movers. Yeah, 13%, 11, 13, 11. This is a mover for sure. A big mover on earnings. So could be last call on Pinterest for anyone looking for it. And the implied move is what? So right now the implied move 28, $3.71. Ooh, it's 11%, right on the money. Toughie. I would probably skip that just based on how it's checking. Royal Caribbean, that's going to be an interesting one tomorrow too in the morning. See how Carnival, Norwegian could be some sympathy plays on that. Paris trades Affirm. Everybody goes crazy. Robinhood is one, I think, man, a lot of these things are just beaten down. So two names here, Dominion Energy and Robinhood. Dominion Energy, people will be like, what are you talking about? Here's what I'm talking about, Dominion Energy. So last couple quarters, I think it was this one of these two, this guy. So this guy is beaten down. It's a utility, believe it or not. I have a small position here just because it's, I could collect a nice little yield on it. And they had said that they're going to do a top-down kind of business review, and market just did not like that, instantly sold off. But tomorrow or this week, they're probably going to announce, hey, this is our findings of that business review, and how the market digests that could bring this guy back at least to its kind of basic level. So this one typically doesn't move. Again, one more, I think it actually has a potential to, just because of what else is going on, that the option chain really can't really factor in that stuff. Typically does not move at all. 1%, 3%. 3% was the biggest. I think it has a potential to kind of reverse that, or maybe it wasn't as bad as they thought. This is going to be an interesting one for me. I know it sounds boring as hell for most. And then Robinhood too. Robinhood is I was never a big fan of Robinhood, the stock, not up here at least. But if you guys know, I'm OG crypto, old school crypto. And Robinhood finally made a change, one of the first changes that actually to me makes them into a potentially legitimate crypto broker, like a Coinbase, is that you can move crypto back and forth in and out of Robinhood now. You can send token. And I was like, this. I don't remember them ever announcing it, but they're the only ones that can do an instant deposit over the weekend. Coinbase or any of the US exchanges, they're never going to have you give you the opportunity to do that. All right, so Scott's requesting CVS. So CVS had a really big sell-off. This is a tough one. So CVS has earnings coming up. Michael, do you remember who's the better operator, CVS or Walgreens? I don't remember off the top of my head.
I thought it was Walgreens, but
yeah,
that's what I thought.
So CVS had this major supply right here, right? So prior support turns resistance, right? So support, instantly tagged it. And I was watching this when it happened, instantly tagged it, and it's starting to pull back. What we know about earnings, though, is that earnings don't care about your technical levels. They literally throw them out the window. So this is only going to be, it's only going to come into play after the report. CVS has been a funky one. Let's see what the average moves are. In terms of earnings, all I'm going to tell you guys is what's the average move, what's the implied move, and then you have to make your decision. The only way to play earnings is to understand, is something overpriced or is it underpriced, right? And so you have to go through this. It's just super simple. I'm just doing mental math right here. So 2%, you can't see, right? So 2%, when it says this is the move and this is the implied straddle, this is what the options market is pricing in. So what this is going to tell you is that how often were your long calls or long puts, either way, burned essentially, or when did they play out, right? So long options did not work. Long options did work 2 quarters ago. This is not going to work. They actually, so this is like a 50-50 shot on this. So versus the implied move. So 5.5% for 4.4 implied move. and these are very small wins. So it might be better to pick like a direction on this one. We'll have to, let's see. Current IV is lowish. CVS at the money straddle. $3.70 move. So currently markets implying a $3.75 move, $3.70 move. If you go in and compare, what the dollars were, which is 2.3% at this time, they were trading about $95. Looks like that was a $2 move. This was a $6 move. This was a $3 move. $1. Really? Oh no, $5 move. $5 move. So it's a $3.75 move. Looks like it's about a $4 average move. So compare those kind of things. I think the ones that could completely flip everything on the lid: Robinhood, PayPal. I guess we have Enphase tomorrow after close too. That's one to watch. And anybody else? Cloudflare could be another one.
Yeah, Enphase for sure, right? Because that has some nice volatility to it. But who knows?
Yeah. So like Enphase, NPH, Enphase. Yeah. So last quarter, buying options burned you. Quarter before that, it worked. Quarter before that, you got burned. You made money. So 1, 2. Odds not that great here. 1, 2, 3. 3 out of 6. So 50-50 on this one. I'd like to see better, but the beats are big, or the differences are large. So that's to the plus side on buying options. Just the differences in what the actual move versus the implied move. You're either going to make a bunch of money or you're not. But 6 quarters, not enough. I would probably like to see more data. But that's definitely potential. Right now, IV is pretty high. So what I'm typically looking for is situations like that Disney, right, where IV is not high and I have a potential to actually make money. See where PayPal, the stock, the underlying, yeah. So this is probably one of those perfect. So where I can find lowish IV, but has the potential to make some serious moves, right? I like this setup right here, specifically PayPal. Sometimes you get burned and end up winning. Yeah, sometimes you do. All right, guys. I think for the most part, that's it. If we want to take a look at some actual trades this week, I think Tesla's going to stay on watch. Tesla's in an active move right now. It's coming up here. I want to see it break out of this 196 level. Here's the 198.97. I think over this level, clearly Tesla just goes, right? So this is going to be a big one to watch this week. I'm just going to sync this really quick just to show you. Actually, let's make this into just a straight across line. So here's the top that we're fighting with right now. So this is 198. Call it 200 for round numbers, right? And this is prior support here, breakout level. This was the massive breakout level. So Tesla, big move off the bottom. Typically a couple days of consolidation. It may not get above this 200 this week, but if it does, we're looking for that kind of like breakthrough, retest, and then hello tool, breakthrough, retest, and bounce up. And then you could see 233. You should see 233 quickly, 235, right? Which takes you right.
I'd like to see a consolidation here underneath this level, because you're right. This is such a big level there.
So here's what consolidation looks like, right? So today is the first day we're not making a new high in a while. And so that could mean that today is the day of consolidation. Very likely, right? That's why I was thinking potentially next week. If Tesla consolidates, right, you're looking at a 2-week consolidation, which would take you close to the end of the month. And so if we break below 190, it kind of comes off of my swing radar. You can still day trade it, but 190, yeah, if we get any close below 190, that to me is you're going in consolidation. You're not going anywhere, and you're not going anywhere for likely the end of the month. You'll make higher lows, lower highs, and just continue to chop for probably about 2 weeks. And that's typically the deal there. I think Boeing's a perfect example where look, we didn't make a new low. So what happens when we don't make a new low? Well, it's not going down, right? So Boeing is going to continue to consolidate for a while. That's my read on this guy right here. And I think, unfortunately, there's a lot of charts that are like that. Some that aren't, that we could look at. Apple. So we came into a massive level. So this is a funky one, right? Huge run up, right? We're kind of just ran into that 157, 1, 2, all of this prior support, resistance, immediately failed. This one I think could pull back to like that 50-day or 200-day, maybe a little bit slightly lower. So that's potentially a $10 move, and then begin to consolidate. So this was just such an outsized move. I think we could trade this little range in here right now. So for now, I hope it doesn't. I had a 145.8 end of February put that I closed most of this morning, and I think I probably just turned that into a calendar, just to kind of trade inside this little range. But I'm not targeting. What I'm not doing is I'm not targeting necessarily like 130 or something like that. That's gonna be a while. So let's see what else. Yay. Pfizer. Yeah, Pfizer's another one. So Pfizer, interesting. So this is that price action that we were talking about earlier. So earnings here, miss, instantly bought up, kind of go into this consolidation. This one has been consolidating for, what is that? Almost 2 weeks post earnings consolidation. We are in day 7. So 7 days after, I think you could potentially look at this as some possible accumulation. Once it makes a new high, it's got to break out of this 44.50 for me to really start trading options. And I need to see that breakthrough here. Actually, it's got to break this level. So you have a little bit of a gap, but I need to see it. Wow, is it really going to be that long? I need to see it break that level, 45, come back down. That feels like a lot. These are going to be small ranges actually here. So if a break above 44.50 and hold, then you could trade, I guess that's $1, and see where it goes from there. Hopefully it does this kind of move, but we'll see. It's a tough one too. I think that's more of equity play or short puts. I think this is clean sell puts. Let's see. EQT. Man, who's watching UNG? Anybody watching that? This one's got me going. So UNG, big move. Now we're in this consolidation. How many days is this consolidation? No new low, 3 days. So third day of consolidation. And we're right at what level? So that was my first level I'm watching. I guess we're right here. 3 days consolidation. I think this one's still on watch. It's not going lower. That's right now. I mean, this consolidation is not bad. So that's toughy. It's really not going higher either. It's trying, but it can't go anywhere. I got to put this on watch just to keep it on watch. I'm not ready to pull a trigger on this one. This has been like the cleanest trend ever, but to the downside for the longest time. But all right, guys, that's more or less it for me. I had one. So we wanted to see Nordstrom. So Nordstrom's is a clear fair value gap down to 21.50 if it continues lower. But again, this is that. What did we hit? This is that short squeeze name. You never know. 23.36 looks like that's where we stopped till in dime. Yep, right at that prior high. So now is when you watch to see what happens next, and a trade shows up. Cool. Michael, you watching anything this week?
Nothing different than when you are. PayPal's very, very interesting to me too. And I know you've been talking about it for a while, but the Fed speakers are going to cause volatility. We know that. I don't think anything else is going to really come into play. What my big thing is from a technical point of view, and I love your opinion on this, is that, yeah, the year has started out great. There's no denying it. There's no reason to
Yeah.
say any otherwise. But to me, it just looks like we're at the top of the range, right? On the SPY, right? So just throw up the SPY, whatever, the NASDAQ, doesn't matter. But I mean, the SPY is the best one to look at, right? Because it's the most widely, the S&P 500, sorry, is the most widely watched, right? I mean, to me,
Yeah.
it looks like, okay, well, we're just up at the highs again. So it's like, I don't know. Like I think we had this kind of mini euphoria a few months ago, and we rolled right back over to new lows before my wonderful Yom Kippur low got put in, right?
Oh yeah, you killed that. So I
But
guess,
yeah, go
yeah,
ahead.
I
The
still
trend
think,
line break. I know, I know. That's
well,
the difference.
so trend line breaks, I'll typically, I don't know if I trade differently than the rest or not. I tend to fade them, to be honest. So like the first break, like you get the break, and I would tend to fade initially. Um, and this one looks like you break, fade. If it comes back down, this is what I'd be looking at. If it comes back down to this level, that's the dip buy to me. So what is this? And this is SPX. On this does line up. I'm just looking here to this whole consolidation here. All this top of that. I mean, this is 3903 on SPX, but on this 3900. I mean, that's going to feel brutal if we did come back that far. But honestly, like that would be one more higher low after breaking structure. Breaking structure meaning here's your high, right? So
Yeah,
if it's,
and it's the kiss goodbye. It lets people who missed it get in. It
yeah,
does so many things, right? Like just momentum, like just kills. Chasing momentum can just really just kill. Like it's so, but yet we're so impatient as a species, right? To just wait for us to come back and hit that move. But that would be, look, that would be a beautiful point, because the best part about picking it up there is where you're wrong pretty quickly, right? Again, that's the most important part of this, right? It's not how much money you're going to make, but how much you're going to lose if you're wrong. So buying it up here, well, we could go all the way back down to the retest breakout, and you won't be wrong there, right?
mhm,
But instead, why not wait for that to get tested, and then okay, well, now I can do a really tight stop, and I'll know when I'm wrong a lot quicker. See, buying up here, to me, there's just too much air for
yeah,
you to be wrong, right? Like, oh no, well, let it go a little more, a little more, a little more, a little more. And I know the answer to that is, well, just go smaller. And okay, I mean, there's
yeah,
a million ways to skin the market, right? But I agree with you. I see us, and I would love also, right? So what else does it do, right? Because everybody's so confident after we started this year so
yeah.
strong, and they just think we're going to just do this every month. You know what? Maybe we will. Maybe we're going to be up 10% a month. I don't know.
Yeah, I mean, some people still think we're gonna get down and make new lows,
Yep.
right? Like, I mean, that you have to think that, like, okay, earnings are just getting completely demolished, and inflation is gonna continue higher. To think that, well, earnings mostly, but I really like this, like taking a larger view to pulling the chart out quite a bit. I really like this level, right? So anywhere in here, like if we bounce and hold like this consolidation we just kind of tried to break out of, we had it tested one more time. If we can test it, or even the top of that consolidation, I say the top of this consolidation, this is the consolidation I'm talking about right here, and lines up right here. If we get this right somewhere in here, probably going to line up right to that 200-day moving average. At that point in time, that 200-day moving average is going to be slightly sloped to the upside. Dude, honestly, I like that. I like that dip buy. And I like it just, for exactly what you're talking about, right? It's a very clean, like, here's your risk, right? Like if it gets below anywhere in here, it's just going lower, right? So
Right.
what are you actually risking? Let's say this was your position. Let's say you took this position, and let's say you were targeting, I don't know, call it this prior high. I mean, this is a 1 to 4 almost risk reward.
Right. And
It's
what
pretty
do you
clean.
have? What do you have if you buy now? Right. What's the risk reward if you buy now
Yeah,
instead?
risk reward if you buy now. I mean, Well, you'd have to hold it till it gets down there because it could still
Right.
be valid, right? Like
And you move your
1 to
target
2,
down,
1 to
right?
1. Yeah.
You gotta, yeah. So again, but patience is not in our species. I mean, I look, I have problems with it. I'm not, believe me, I'm not pointing the finger and saying, everybody else is an idiot. I'm the biggest
Yeah.
one, right? I have patience problems too. So it's tough. And when you look at the market every day and you see what's going on, you could get very, it could lean you very easily to say, well, let's get in now and I'll just add down there. But who knows if you can maintain that?
Yeah, and then
I
you'd
don't
have
know.
to add pretty small, and you'd have to plan pretty large purchases down here for that to make sense. One thing, just I mean, again, just pulling this chart back, I'm noticing this level 41.15, right? So this prior high. These are easy to spot, but I didn't necessarily notice that it went all the way back to February of last year. And this consolidation, look at this one, this super tight consolidation right in here. So this is supply that we're kind of just running into and potentially coming out of. So I think this week, yeah, like if it's below 40.87, we should be able to start targeting this lower range. But again, I'm not trading for anything major. I'll just throw a quick fib on this. 50% high to low. Yeah. So from this swing low to swing high, I mean, everything's lining up. And so this is confluence, I would say, right? So anything in this is a 50% retrace to 4,000 on SPX, and 618 is about 39.50 on SPX. So those are the dip buy levels if you get the opportunity, for sure. Lots of confluence there.
Yeah,
From price action
I read a good article this weekend. I'll have to send you the link if I could find it. I'm really bad at not saving these, but it basically, I think it was in the journal, and it said that earnings don't even matter anymore. It's just everybody's worried about the Fed, and I think
yeah,
you didn't prove it, but I think you showed that, right? The Dow. I mean, even though you could probably you could question whether the Dow is the valid index to follow, but I mean,
yeah,
with 11 of them already missing, I mean, that's incredible. I mean, it's whatever 5 times the amount that we've been seeing. So I mean, and the market's still like, nah, don't worry about it. Don't worry. Didn't you hear what Powell said? He pivoted. He pivoted, which he didn't. But
yeah,
another thing I read, which I like too, is that they say, what happens if Powell does come out dovish, right? That's people think that's a good thing, but that means something's broken because the work isn't done yet.
He's just throwing up his hands at this point. He's like, who knows,
Right? Like
man?
I
Nobody
don't
knows
know.
anymore.
It's a very valid point. Like what does that tell us if
Yeah,
he is dovish? Like I don't get it. The work isn't done. That was his big thing. And I mean, unemployment is 50-year lows.
yeah,
And he said that employment is a really big thing for him, right? Which is, and that ain't happening. We added 500,000 jobs, and I mean, we didn't really go into the job numbers that deep, but I mean,
yeah,
it's like even wages are going up. People are making more money. That's not going to help demand inflation. More
yeah.
money. Look, we are a nation of spenders. It's our national pastime, right? And the more
It's our
money we
national
have,
pastime.
the more money we have, the more money we're going to spend. So that is not going to help the demand side of things. But
Yeah,
hey, whatever. Again, we'll see.
yeah,
I love that. I love that stuff the charts you're running through here because they're really, boy. I mean
yeah.
now I mean I really hate PayPal overall. I just as a thing, not the setup. But now I really like that what you're pointing out with it. I'm really going to be watching that one.
I think that's one where it's like, hey, if this is a stock picker's market, right? Your risk reward on PayPal is pretty good, right? Like you're gonna know pretty quickly whether or not the trade's gonna be good or bad. It's an easy exit stage left, right? SPY right now, by the way, just to leave you guys on this note, if you're looking for a J trade, I just threw this. So here's a quick trend line. It could continue a little bit higher. This gap fill here, we filled it, but below 408, you have a quick shot to 406. I know it doesn't sound like a whole lot. This is a very clean fair value gap right in here. Hopefully you can see it from 407 to 406. Is it 407? 408 to 406.50. So a point and a half on SPY. That's like a couple 100% trade easily on SPY or SPX. So there you go. There's my gift. Looks like it's going to trigger pretty soon. But I will I'm gonna call it at that right now. Oh, look, there it goes. Is it gonna make it? We'll see. But I appreciate everybody hopping in. You guys rock. Give it a like, and I will see you on the next one. Oh yeah, and then follow Tiny. By the way, he put Mike's all, but it's Tiny Real at Tiny Real, right?
That's correct.
Yeah, give this dude a follow. Like huge fan at Tiny Real. Yeah, always handing out some good stuff too. And then Wolf Financials, we are up on the schedule. And then this Wednesday, every Wednesday morning, I think we're gonna make it a thing. The crew and I will be trading live.
That's awesome, man. The Wednesdays are my favorite day now. So
yeah, the kids come out to play. I picked Wednesday because like Wolf's always out at like physical therapy, so like there's nobody watching us. We can do whatever. But yeah, he's been super cool supporting it too.
If you're not showing up on those Wednesday mornings, I don't know what you're doing.
Yeah,
they are great, man. They are awesome. So
I
yeah, very
it,
excited about them.
All right, guys. Well, we'll see you, Mike. Appreciate you as always. And we'll catch you on the next one. Adios.